Oil is about to post its third positive week in four as Houthi strikes continue to keep Red Sea commerce at a near standstill. Shipping giant Maersk saying they will divert all vessels south around Africa's Cape of Good Hope for the, quote, foreseeable future. Here's what U.S. Department of Energy Secretary Jennifer Granholm told Squawk Box this morning.
This conflict itself has really only had a limited impact on energy prices. For us in the U.S., the gas prices, for example, are at $3.09 today, 3.089, something like that, more than $1.93 lower than the peak after Putin's war. 30 states, the average is less than $3 a gallon. So we aren't seeing the price per barrel or the impact at the pump. But obviously, the United States is on it and is leading this coalition to protect those commercial shippers.
Let's talk to our next guest about where we might see the biggest fallout as this conflict escalates. We're joined by S&P Global Vice Chair Dan Yergin. Dan, it's great to have you here. And how serious a conflict is this?
Well, I think it's serious, but it could get more serious. Obviously, we're starting to see an impact on oil prices, geopolitical risk coming into a market that up till now has really been dominated by supply and demand, and the supply exceeds demand. And the Houthis show no sign of backing off. And so I think the next stage would be if you saw a real response. And we've seen Maersk today saying, for instance, they're going to stop sending their ships through the Red Sea for an indefinite period of time.
What does the behavior of the oil price tell you, or is it too soon to know?
Well, I think we're starting to see that oil price that really hasn't responded to geopolitical tension, to what's happening in the Middle East, starting to respond. The reason it hasn't responded is because of this phenomenal growth in supply from North America. That today, North America oil and gas is greater than the production from the Middle East, which has been a real stabilizer. But the Red Sea has become an important channel for oil. Before the October attack by Hamas, about oil equivalent to about 40% of what was passing through the Strait of Hormuz was passing through the Red Sea. That number is now down to about half that.
Wow. We spoke with Amrita Sen the other day, and I asked her if we should expect, bigger sanctions enforcement on Iran as this ramps up, which could obviously affect the global oil supply. But she said it might not because so much of that Iranian oil is going to China. It's circumventing the U.S. dollar system, kind of implicitly sanctions. Do you think that's true? How should we be thinking about the risk of losing some of that supply into the market?
I think it could be certainly tightened up. I think we could see the sanctions stepped up. Also, there are other things going on. There's a disruption in Libya, about 300,000 barrels a day. So there is an overhang of supply, but so much of the tension basically revolves around Iran and its proxies in the Middle East and the increase in violence. And we've seen the U.S. responding to the 120 attacks on U.S. troops in Syria and Iraq with this takeout of somebody, a militia leader in an Iranian-led militia leader in Iraq. And I think you have to be very concerned with the Houthis, who seem to show no restraint and are clearly guided by Iran, including Iran providing them intelligence on which ships to attack.